Hey guys, welcome back. In this video, we are talking about how shorts will be forced into closure, the AMC partnership, the huge AMC potential, and many more in this video. First, we're taking a look at this. Now, the domestic box office is something that has been doing very well. We're seeing that it's up over every year post-COVID. And we can see from going from 2021 all the way to 2025. And this year is going to likely to be the same as well. So this is the first thing we talked about when we say that AMC is growing. Now we'll go more on this later on in this video, but just taking a look at the overall box office, you can already see how well it's doing. Now, not only are we seeing growth every year, we're seeing exceptional growth in certain areas. Firstly, we're seeing the highest gross in Q2 to date since ever, and AMC don't even have to reach 2019 levels. Whatever short positions were opened in 2020 when AMC bankruptcy was considered certain have hardly ever been before at this level of risk of being forced into closure. So one of the things we've talked about is just this year in particular, how well the box office is doing. Now, remember, we've already just shown you about how much growth there's been every single year. We have to understand it doesn't just apply to the box office, but AMC as well. We've already seen Adam Aaron say we can make the same amount of profit, if not more, with a lower box office than previous years. And so essentially what he's talking about is even if we don't reach the same box office, even if a box office level was lower, we're still able to make the same amount of money. And that obviously applies to if we are able to get a bigger box office. Now, this combined with the fact that the box office is indeed growing and the fact that AMC is still improving, it just talks about how well we are going to be doing. Now, one of the things we're definitely looking out for is, of course, the Q1 financials of AMC, because we've already seen how well Q1 in 2026 has done. So I'm definitely excited to see in terms of the results that it does. But then not only that, the reason why that's important is because we're already seeing how well Q2 is doing. And so if we are able to see how well AMC was able to be performing in Q1, you can obviously then apply that to Q2 and understand how much revenue they're making and how much money that they are making. Now, if we take a look at this, current domestic box office as of April 12 is 480 million, with an additional 420 million plus for the remainder 18 days would make this the third month in 2026 to take the biggest post-COVID month. So we've already talked about how AMC is obviously doing very, very well. We talked about how well the box office is doing in terms of the growth. One of the exceptional things we've seen this year is how we are seeing record months being made, so January and February, in terms of the biggest post-COVID month. Now, if we were to see an additional 555 million, we're able to get the largest April ever. And so we have seen just exactly how big the box office is getting, how big it's going to get. And so in terms of how well AMC's positioned themselves in this market, I would say that they are doing very well. One of the reasons why I say this is because not only are we going to be seeing a big April, we're also going to be looking at a big Q2, like we were saying, with 2.5 more months to go. But you can see how the media articles are changing their views on AMC. We can see here, movie theaters finally emerge from the shadows of the pandemic. Now, we have already just seen how well AMC has been growing, but now is when they start acknowledging that everything they've said about the movie industry, everything they talked about with the box office has been wrong. Everyone has said that we will never see it improve, we will never see it recover, we are going to see it go to zero. But it's only done the opposite of that. And now we're finally seeing how they are acknowledging this. Recently, we've seen multiple articles talk about AMC as well. So this is obviously talking about in terms of just itself, but we've seen how more and more articles have been talking about AMC and talk about just how undervalued they are. And we've already gone over these articles, but it goes to show that people are recognizing what's going on. And you can see how AMC is trying to really captivate on this because we are seeing a new partnership. National Cinemedia and Creative Realities announced a new partnership to significantly expand and modernize AMC theaters in lobby media footprint across 285 locations nationwide. So this is another partnership that we are looking, and you can see exactly what it does for AMC. Essentially, it will turn the lobby at the participating theaters into a network of digital displays, including multiple 75-inch screens per location. This will deliver high-impact video, brand storytelling, and interactive experiences. These upgrades create a premium video platform that expand opportunities for advertisers to reach audiences both in the auditorium and throughout the entire theater location. So I want to talk about this already because there are two key things that I want to go over. One of the things is the keyword premium. For those of you who don't know, AMC, Adam Aron have been really highlighting the word premium. Now, the reason why they say this is because they've done a survey, they've conducted a survey, and with the data, it will show that premium theaters, premium experiences are actually attracting more attendance. So it isn't just the cheaper it is, the more attendance we'll get, but actually it's more towards a more premium, but of course in return of that, a more expensive cost. People are actually attending that. So people aren't just attending kind of the cheap things, but they want a more expensive item because it creates that premium that they want. So this firstly is exactly what we want to see, that they are double down on what's been successful for them. But secondly, you can understand how this is obviously going to be a way to increase their advertisers. And of course, we will see this generate revenue as well. So this is going to be extremely good. And obviously it goes on as well. One thing I do know is that this is definitely going to be something that will allow AMC to become even bigger and obviously become more efficient and in return make more money. Now, you can see we are expanding Dolby's and IMAXs while modernizing our lobbies. I've never seen a company going bankrupt this active. So we have to realize just how well AMC is growing, and how much AMC is doing. And you can really understand in terms of how can the company possibly go bankrupt if it's doing everything it can to obviously grow itself. If it's doing everything it can to captivate on the opportunities that's being presented to them. And so we have to realize the position that we're in and still how undervalued AMC is. So let's talk about this. So earlier in the video, I talked about how this piece of information with the box office growing is extremely important to AMC. And here is why. The leader, because we are firstly the leader in the industry, the #1 movie chain. We hold 47% market share, premium format dominance in IMAX and Dolby. So this is what we're seeing. If we take a look at the 2025 domestic box office breakdown, you can see 23% of total was AMC. We saw a total domestic box office of 8.65 billion and 1.99 billion coming in at #1 was that of AMC. So you can understand why I've said if we are seeing the box office grow even bigger, the biggest benefactor will be AMC. And remember, there will always be people tackling in terms of the how AMC is doing in terms of their earnings, but you have to realize they are becoming more and more efficient. And so this is something that's going to allow AMC to then grow even more. And we understand we are captivating the majority of the market share, and this very likely is only going to get even bigger, therefore making more money. And so when the AMC dam breaks, and it will break, the pool of panic buyers will literally be overwhelming. They may be quiet now, even doubting whether it can happen, but when it goes, expect a flood that has never seen before in stock market history. Now, this is very important to talk about because firstly, we already see the effects, but it's on a smaller scale. Now, today, AMC has done exceptionally well. We're up 7.41%. We closed at 145. I'm not surprised we closed here because this is where we touched before the week ended last week. Now, the reason why I talk about how we're already seeing this on a smaller scale is because you can see here, when we saw AMC go below 0.93, everyone was calling it the end of the world, at least the haters were. And then as soon as we saw AMC go up above $1, as soon as we saw the momentum come in, you see how people started FOMO in, you started to see how people were buying in. Now, the apes who have always been here and been consistently and constantly buying, obviously that's a different story. But we are definitely seeing a portion of people who are buying in because they finally see this volatility and they don't want to miss out because they've realized the opportunity that AMC presents. And so what we talked about here with how buyers would flood in, we're already seeing it. We see how it's going to happen. This is just an extremely small scale in comparison to what will happen but you can see the effect that it can have. And so one of the biggest things that people are talking about, and one of the biggest things people are realizing, is they can't imagine selling AMC here because they've realized how big the upside potential is. Imagine not accumulating AMC at current prices. Accumulating 17,000 AMC, assuming AMC hits only $60, equals $1 million. And so this is the opportunity that's obviously being presented to us because we've seen how high AMC has gone in the past. And so we realize that they have that possibility again. But not only that, it goes even higher. And not to mention $60 is nowhere near the all-time high that it was at. And so it's people realizing this kind of asymmetric return that's going on right now for AMC, and they realize that the downside is so little, but the upside is extremely huge that they want to get in on this. And we have to understand is that short sellers have been affected as well. We talked about how this is obviously done because some people are FOMOing and they started to buy into AMC, but we're seeing short sellers get crushed here as well. So because of this, let's talk about this. Some people have been mentioning that the short interest has been dropping on AMC, but they aren't telling you the whole story. So you will notice that the short interest is indeed dropping, but the own loan average age per day is increasing as shares are being returned. What this should tell you is that newer loan shares are being returned, not older. So this is very important because what we are seeing right now with this is that the rising average age confirms the returns are real and selective, whereas newer positions covering. So this is very important to understand. Because the reason why I'm saying this is because we understand these newer positions being covered. Now, when you take a look at AMC, one of the things we talked about was there was a mass of short positions that were opened underneath the $1 area. So during these 2 days or 3 days of AMC going below $1, many short positions were open, and of course some positions were open along the way as well. We talked about kind of the 130 area, we talked about it going down gradually, but there was a big block at 130 as well. So there were two significant areas where people were opening up short positions. And so going back to this about talking about how the newer positions are covering, it is indeed these guys who recently shorted AMC who were affected because AMC has now gone up by more than 50% in that span of the days. They are worried about what's going on. They are actually getting crushed by this price movement, and so they have started covering. So if you want to talk about any direct effect we've had on short sellers recently, this is what we're looking at. The fact that they are closing out the newer positions. Not to mention, even if you take a look at the short interest data here, we have to understand it is self-reported at the end of the day. So potentially the short interest is dropping, but we have to understand is that what the particular number that we're seeing isn't true. So yes, they may have gone down by 20%, but in reality, what we have to understand is that the real short interest data is already in the hundreds, if not thousands of percent. So they go now by 20%, but that's nothing in comparison to the thousands of short percent interest that already exists out there. But then it just goes on to talk about how the new positions were crushed. Another big thing that we're seeing this week as well, which is the option chain for AMC. You can see here a big open interest for AMC at two different strikes, the 150 calls and the $2 calls. So we're already exceptionally close to 150. Of course, we are at 145. So you can imagine the pressure that we'll be facing. We have to bear in mind that they want to prevent AMC from closing, firstly above 150 and then secondly above $2. But this is what we've talked about with how much effect we can have, about how much damage we can do to these guys if we're able to close above these areas. And so definitely something to look out for, especially with how much pressure it can give us. Another thing to take a look at is GME. So currently we're seeing how GME recently has just announced the selling of the French operation. So this is AMC cleaning house and tightening operations before major acquisitions. This will hit revenues, but when an M&A comes, it won't matter. So this is how GME is obviously doing their approach. Now, Michael Berry is definitely a fan of this because we've seen him increase his position. You can see here, if you take a look at the GME next to the small caps, we're seeing how it's similar movement. We're seeing how it's identical with the cycle turning. So we could be expecting some major things to be happening because on top of this, we talked about this. GME is sitting flat, but it feels like it's the calm before the storm. And at any point, does anything happen, we're going to see that explosion going on. Because in terms of the insiders right now, we're seeing them buy as much as of GME as possible between the $21 to $23 range. So it just goes to show that they are definitely expecting something, and they are realizing and showing that GME is undervalued. So they're willing to be buying this many shares of GME at this price. Another big thing is HYMC. So what we have to see is that recently Eric Spot has bought more HYMC, and you can even see this. Imagine selling now when the largest shareholder in the sector is front running the $40 breakout. If 39 was a buy for a billionaire, 37 is a gift. And it also goes on to talk about how underappreciated HYMC is and why even at this current point, we're still seeing it being undervalued and a discounted area to buy. Let's take a look at the macro news right now. Big things have happened. Firstly, we're seeing the bank's headline, and we're seeing how they're showing fragility. Because firstly, Goldman Sachs has tumbled despite beating first quarter earnings. So why is this happening? Well, firstly, it could be to do with the credit default swaps with the private credit that we have talked about. And we talked about how they're creating the index in a way to offload their CDS positions onto everyday investors. So this may sound very, very similar. And if you take a look at exactly what happened in 08, you can see that we're looking at a similar thing, just with different derivatives. And so if you want to talk about how we're going to be seeing another 08, this could be the reason why. If you take a look at the reverse repo, 0.227, also exceptionally low as well. So we're not only seeing the private credit crunch, we're also seeing the lack of liquidity. These are the reasons why people are selling off banks. We also talked about Citadel losing money in March. You can see their fixed income crashes 8.2% in March. So this is talk about short sellers are indeed getting hurt, and they are going to be getting hurt even more in the future. And we're already seeing them lose money. And then with the volatility that's still ongoing, Brent crude oil, 8%. This is very important to obviously note. And so this is what you have to expect in the market. As always, now this is financial advice, and I'll catch you guys next time.